Welcome to Countarts. In this lesson, we're going to be looking at the grade 9 question paper, specifically the EMS question paper, or the Economic and Management Sciences question paper. This is basically an accounting paper, if you will, for the most part, because when you're dealing with accounting, this is what you'd be looking at. So if you are in grade 9 and you're looking at EMS, or you want to know more on accounting, especially the foundation level, this would be a paper that you can look at. So this is for June 2024. So we're going to go down and just go through it together in explaining what we need to take into account. And so you can get this question paper if you go to Google, look for grade 9 question paper June 2024, and you'll be able to get it and you can follow along. And so you can see all these questions that are here. So let's go into the question paper. Section A, short questions. Question 1, and I've got 1.1 here, the matching items. So we are reading what is on column A and matching it to what we have on column B. Such a question really helps you with foundations when it comes to accounting, and so you will have a good understanding of what specific terms would mean or would be referring to and what they affect. So let's go through them one by one. Let's look at 1.1.1. What are we told here? Resells goods at a higher price to make a profit. Well, what would you call that? It's not a trial balance, it's not expenses, because you are reselling goods to make a profit. It's not credit sales. Credit sales is specifically you selling goods on credit, meaning your clients or your debtors will pay you at a later point in time. Trading business, analysis of receipts, no. Sundry accounts, double entry system, no. And so the one that comes close to that would be the trading business. And so a trading business is the one that sells goods at a higher price to make a profit. Remember, it doesn't necessarily have to just be goods. It can be a service that you're selling so that you can make a profit. So the answer for 1.1.1 is D, trading business, because that's what it does, selling goods to make a profit. Okay, otherwise why are you in business if you're not intending to make a profit? 1.1.2, for every debit entry there must be an equal and corresponding credit entry. What do we call that? Well, that is called the double entry system, or the double entry principle, meaning that whatever you debit, there must be a corresponding and equal credit. Whatever is on the debit side must be equal to whatever you put on the credit side. And you know this if you've done journal entries before, or if you'll be doing journal entries, you have to know that whatever I put on the debit side, there has to be a corresponding credit entry, and the amounts have to be the same. Your debit must equal whatever you have on the credit side. To understand that more, you can look at the lesson on journal entries. You'll find a link to that lesson in the description below, where we explain and go through examples in journalizing the entries to show you that for every debit there must be an equal credit. Okay, so the answer for 1.1.2 is double entry principle, or G. 1.1.3, entries from this column are posted to the general ledger on the date the transaction occurred. Which one would that be? Would that be the trial balance, expenses, credit sales? We've already put in D, or analysis of receipts, or sundry accounts. Well, the answer here would be sundry accounts. What do we mean by sundry accounts? Well, sundry accounts are accounts that we use to record miscellaneous or infrequent transactions, right? Transactions that don't occur often, that do not fit neatly into a specific category or account that we usually have. Okay, so whenever you see sundry account, it's for accounts that do not fall into any other column. Okay, so you might have columns for maybe debtors, or for bank, or for creditors, but then you have a transaction where you paid for rent, for instance. Well, it may not fall into any of the other columns, and so that's where you'd put it into sundry account. Okay, so this is usually for rare transactions or once-off transactions. Okay, so entries from this column we post it to the general ledger on the date that transactions occurred. Although it's not the only account that you'd post to the general ledger, but this is the only one that we see here. So here the descriptions are not too clear for us to say this is definitely for sundry accounts. But if you look at the solution, they do indeed put the answer for 1.1.3 as sundry accounts. But as I mentioned, it's not only sundry accounts which should be posted to the general ledger, and so it does not neatly fit in there. And so the examiner needed to have clarified more what is referring to. If 1.1.3 had stated that this is the column where we post infrequent or once-off transactions, then absolutely sundry accounts would be the answer there. But in stating 1.1.3 the way it's stated, it could be an entry from any other column really, because they can go into the general ledger. Okay, so that's just some background to it, but the answer that they put there was F. Alright, 1.1.4 decreases owner's equity on the debit side. Okay, so the question is, what do we record under owner's equity, or what affects owner's equity? Well, you may need to note this down, but this is income, expenses, drawings, and capital. Okay, so those four affect owner's equity: income, expenses, drawings, and capital. And so which ones increase owner's equity and which ones decrease owner's equity? Well, income, that does increase owner's equity, which should be obvious, right? And what is owner's equity, by the way? Owner's equity is whatever the owners of the business own, okay, or whatever belongs to them. It's the stake of the owners of the business in the business. So income will increase their stake in the business because it's increasing how much they are making. All right, what else? Capital is how much they've invested in the business, or how much the owners of the business have invested into the business. That would increase their stake in the business. But the two that decrease the owner's equity would be drawings and expenses. Those ones would decrease owner's equity, because for every expense, it reduces how much profits they make, it reduces how much they have as a stake in the business, and that's why it's put on the debit side. Remember, owner's equity increases on the credit side and decreases on the debit side, and so that is why they're saying this one decreases owner's equity on the debit side, because owner's equity decreases on the debit side. And so one of the two things I'm going to look for in column B would be expenses or drawings, and you can see obviously we are given expenses here and not drawings, and so the answer there is expenses, or B. So 1.1.4 is B. If you had drawings and not expenses, then you would of course select drawings, because it has the same effect on owner's equity, decreases owner's equity. And if you'd like to understand more on what decreases on which side and where you record what, you can check out the lesson Accounting for Beginners, lesson 1. You'll find it in the link in the description below as well, which gives you a very good accounting foundation, and it will help you answer questions such as what we have here in 1.1. 1.1.5, payment for goods sold will be received at a later stage. Now, what do we call that? I've already given that answer when we're looking at 1.1 in explaining credit sales. What do we mean by credit sales again? Credit sales is whenever we've sold to our customers, but they're not paying us cash. They will only pay us at a later point in time. And so that's the answer for 1.1.5, because it says payment for goods sold will be received at a later stage. That is when we've sold on credit. If we've sold on cash, of course, we're receiving the money immediately. I hope 1.1 was easy enough. You're able to follow along. If you check out Accounting for Beginners Part 1, you should be able to get a hang of questions such as this much better. All right, let's look at 1.2. Choose the correct word or term from within brackets. Write only the correct word next to the question numbers 1.2.1 to 1.2.5 in your answer book, e.g. 1.2.6. receipt. Okay, so we are given two options in brackets here, and we have to select the correct one. That would be the answer to what they're mentioning. So let's look at 1.2.1. A, either bank overdraft or mortgage bond is classified as a non-current liability. Well, which one would it be? You'd know the answer if you know firstly what is a liability. Liability is money that you owe other people. That's as simple as I can put it. Okay, money that you owe anyone else, we call that a liability, or whatever you owe someone else, that is a liability. Okay, so if the business owes money to the bank, maybe we took out a loan, or we owe money to the director who borrowed us money, that is a liability. But what do we mean by non-current? Well, non-current liabilities are liabilities that will pay over a period of longer than 12 months. Okay, but current liabilities, on the other hand, are liabilities that will pay within the next 12 months. That is in a nutshell what the difference is between current liabilities and non-current liabilities. Non-current, the question is, are we going to pay it over a longer period than 12 months? If the answer is yes, that's a non-current liability. But if we're going to pay it within the next 12 months, then that would be a current liability. So what is the answer for 1.2.1? Well, the question is what would be classified as a non-current liability, meaning which one would we pay over a longer period than 12 months? Well, we have got bank overdraft and mortgage bond. Firstly, what is bank overdraft? Well, bank overdraft is when a bank allows you to spend more money than you have in your bank account. So it's like borrowing money from the bank for a short term. So if you have money in your bank account and you have a credit facility, that's when you will have a bank overdraft, where you can spend more money than you have in your account, and then you have to replace the money that you've spent that belongs to the bank because you spend more than you had. Okay, so what would that be? Well, usually your bank overdraft you'd pay over a short period of time, sometimes 10 days, sometimes 20 days, 30 days or 45 days, depending on what agreement you have with your bank. But it will definitely be something that is paid over a month or 60 days at the most, depending on the facility that you have with the bank. But it's definitely not going to be something you're going to pay over a longer period than 12 months. So bank overdraft is definitely a current liability. Okay, so that's not the answer. So obviously the answer is going to be mortgage bond. Mortgage bond is a type of loan used to buy property like a house or land, where the property itself is actually used as a security for the loan. Okay, so usually when you're buying a property, then you would take out what is called a mortgage bond, and obviously you're not going to pay that bond over a period of less than 12 months unless you've got a substantial amount of money or you win the lottery and you decide to pay it off. But the intention behind taking out a mortgage loan is that you'll pay it over a long period. In South Africa, the common period is 20 years. Otherwise, for some, it's 30 years. And so that is what a mortgage bond is. And so it's classified as a non-current liability. Remember, non-current liability meaning you'll pay it over a period of longer than 12 months. And so the answer for 1.2.1 is mortgage bond. And you can see here, understanding the theory or understanding what these terms mean will help you get the right answer quite easily. Let's look at 1.2.2. The bank statement, or EFT, is a source document that can be used in both the CRJ and CPJ. Well, what's the answer there? Well, easy. The answer is bank statement, because EFT is when you're making an electronic funds transfer. Okay, that's what it actually means. So it's not a source document, but the bank statement is a source document that can be used in both the CRJ, which is the cash receipts journal, and the cash payments journal. Because when I look at my bank statement, I can see how much money I've received, which goes into the CRJ, and how much money I've paid out, which goes into the CPJ. And so the answer there is the bank statement. 1.2.3, merchandise or consumables purchased will be recorded in the trading stock column. What is the answer? Well, the answer is merchandise, okay? Because merchandise is our goods that we are buying so that we can sell them, otherwise known as trading stock or inventory or stock. Okay, so that one would go into the trading stock column, because merchandise is what we are selling in the ordinary course of business. What do we refer to as consumables? Well, consumables are items that are used up or depleted daily during the operations of the business or the activities of the business, and we replace it regularly. So this would be things like your pens, your paper, your printer ink, or your cleaning supplies. Okay, so those ones would be consumables. So that's definitely not trading stock. And you can see from trading stock, the term that trading, that's what we use to trade with our customers, meaning whatever we sell in our ordinary course of business, that would be trading stock. Otherwise, the small things that we use in the business, that would be consumables. The small things like I've just mentioned, like pens, gloves, toiletries, or batteries for your calculators, whatever it is, those would be consumables. So the answer for 1.2.3 would be merchandise, which is also known as trading stock or inventory. That's why it goes into the trading stock column. 1.2.4, assets or expenses are recorded in the balance sheet accounts section. Well, remember, this is now referring to the trial balance, where you have two sections. So you have the balance sheet account section and the nominal account sections. In the balance sheet account section, we usually record what goes into the balance sheet or the statement of financial position, which is assets, liabilities, and capital and drawings, which goes under equity. And so the answer there is, of course, assets. Okay, but expenses goes under the nominal account section. In fact, the two elements which go under the nominal account section would be your income and expenses. Okay, that goes under nominal account section, but everything else goes under the balance sheet account section. So the answer is assets for 1.2.4. 1.2.5, the credit limit or credit record indicates the maximum amount that a debtor can owe to the business. What do we call that, or what's the answer? Well, it's the credit limit. Credit limit is where we've limited our debtors to say you can take goods up to a certain amount on credit, meaning that's the maximum they can owe the business. Okay, and remember, a debtor is someone who buys from us on credit and only pays us at a later point in time. And that's why it's important understanding these terms in looking at it. What is a credit record? Well, a credit record is a detailed history of a person's or a business borrowing and repayment behavior. All right, it's maintained by credit bureaus and used by lenders to assess how reliable you are in paying back loans or credit. Okay, so it looks at how you've been paying back your debt over time, and that would form part of what your credit record is. So the answer for 1.2.5 has nothing to do with credit record. It's speaking about the credit limit, which is the maximum that the debtor can owe us as the business. Alright, I hope that was helpful. If you'd like to understand more on this, like I said, you can check out Accounting for Beginners Part 1, or you can check out our lessons on the CRJ and the CPJ, which we looked at in 1.2. 2.2, or you can check out how to do the trial balance, which we have looked at in 1.2.4. You can check out our channel where we've done a lot of those lessons. So let's move along to section B, theory, accounting equation, and journals. Question 2, credit transactions, theory and analysis of transactions. And so let's go down and see what is required. 2.1 says identify the data in the above transactions. And so let's go ahead and answer these questions as we have been given. Well, first things first, what is a debtor? Well, a debtor is someone who owes us money. We are the business, we're selling to them on credit, and now they owe us money. They're called a debtor, otherwise known as trade receivables. And so let's have a look at this transaction above here. You are given information. The invoice below refers to a credit sale transaction where the business sold goods at a markup of 60%. Study the source document and answer the questions that follow. Remember, we are the one who issue source documents to our customers, and so you can see it's written invoice. And who is the invoice written to? Well, to G. Smith. And so that is the debtor. We've sold to him on credit and we have issued him with this invoice. They are our debtor. Remember, they told us credit sale. And that's how we would know that this is our debtor. Okay, we didn't sell it to him on cash. Another way you can find out is you see here the terms, 30 days. Otherwise, they can say cash transaction if they required immediate payment. Therefore, he would not have been our debtor. But the answer for 2.1 is G. Smith. Okay, we've just identified who the debtor is. Now 2.2. State the law which protects both the business and the consumer in the above transaction. Okay, so the question is, which law will protect both the consumer and the business in the above transaction? Well, there are two laws that I can think about here, so it wasn't specific enough to say which one of the two you should identify. The first one, which is obvious, the Consumer Protection Act. Okay, this one protects the business and the customer in transactions. All right, so it ensures that there is fair trade and that the customer rights are also upheld. So that is the first one. But the answer that they put here is the National Credit Act. What is the National Credit Act? Well, the National Credit Act regulates the giving of credit or the granting of credit to customers. So this one here protects the customers from taking on too much credit and they're unable to pay back, meaning it regulates how much a company can lend to customers, because you don't want reckless lending by companies where the customers are over indebted and thereby unable to make a living. And so that is the National Credit Act, and that is what it does. But like I said, it's not the only one. Consumer Protection Act is another one, but the answer that they were looking for here is the National Credit Act, but they should have been a bit more specific. Remember, the National Credit Act is applicable here because you're selling to a customer on credit. If it was a cash transaction, then it won't be applicable here, okay, because you're not extending credit to the customer. But in this case, since you're extending credit to G. Smith, that is the answer that is applicable. 2.3, suggest one practice which the business can put in place to get the debtor to pay on time. And so what can the business do to make sure that this customer pays within the next 30 days? Because remember, the terms here, as we've mentioned, is 30 days. And so what can we do to ensure that they pay on time? Well, the obvious one is giving them discount. Okay, so if you tell them that I will give you a discount if you pay in less than 30 days, or usually what businesses do is to say if you pay within 10 days, for instance. And so they don't just tell you if you pay within the time limit. They know that customers usually do that, especially those ones with good credit records, but they will give a shorter amount of time. Let's say if you pay within 10 days, then we'll give you a 5% discount. That would encourage customers to pay on time or to pay early. Or you can say within 20 days, then we'll give you a 5% or a 10% discount, and customers will want to take advantage of the discount and pay early. Otherwise, they need to pay on time. Another one, if you don't want them to pay beyond the credit term, and in this case beyond 30 days, so you don't want G. Smith to pay after 30 days, you can have a clause that states that there will be interest for late payment, and so you can charge interest and penalties for those who pay after the credit term has lapsed, and that is what will encourage them to pay on time as well. Okay, so there are a variety of ways you can encourage your customer to pay on time. One is a positive one, or you're issuing them the discount, but second one is a negative one, where you're saying that if you do not pay on time, we will penalize you or charge interest on overdue accounts. Now 2.4, analyze the transaction from the source document above and show the effect that it has on the accounting equation. Follow the example and columns as set out in the table in the answer book. And so I've just copied the table in the answer book, and here it is for 2.4, and we're told that we should follow the example and columns as set out in the table below, and I did copy the table. And we're given an example here. Received 2,000 rand for rent from the tenant for the building let to him. And so if we receive rent from our tenant, that means we're debiting bank because money is coming into our account. Bank is an asset, and we're crediting rent income because rent income is an income. We know that our income increases on the credit side. If you'd like to understand more on that, we have looked at Accounting for Beginners Part 1, where we explain in great detail what accounts we have in accounting, which side do they increase, and in which side do they decrease. But in a nutshell, for the specific example that we're given, bank is an asset. We know that our assets always increase on the debit side and decrease on the credit side. Rent income is an income. We know that our income always increases on the credit side and decreases on the debit side. And so because bank is increasing because we're receiving money, we're putting it on the debit side, and rent income is increasing because we have just earned this rent income, then we're putting it on the credit side. Now let's do the example that they want us to do. You can see they've already told us what we have to do here. You've got sales, and they've given us the sales amount here, and now we have to do trading stock. And you can see the effect here for the sales. Remember, they've just given us the credit, they didn't give us the debit, so we have to figure out what is the debit in this case. And how did they get this 8,496? Well, let's go back here. You can see the total is 8,496. Now whenever you make a sale, that is what you're going to do. You take how much the sale is worth and you're going to record it as a sale. And remember, sales is an income account, increases on the credit side, just like rent income. And so what is going to be debited? Usually whenever we make a sale, just know that you'll always credit your sales. But what do we debit? Well, we always debit one of two things. We'll either debit bank. That's if you sold on cash and not on credit. Remember, when you sell on cash, you receive money immediately, so you debit your bank there. But the alternative is to debit debtors control. And when would you do this? Well, whenever you sell on credit. And that was the case here. Remember, we sold to G. Smith on credit, and we have explained why it was on credit, because we're told that terms was 30 days, and we're told up here that it was a credit sale. And so what do we need to do? We debit our debtors control. And so we'll have to put debtors control here as the account debited. So I'm going to put debtors control. And why am I debiting debtors control? Well, the question is, what element is debtors control? It's an asset. And as we mentioned, as with the example they gave us for bank, which is an asset, our assets increase on the debit side. So whenever you sell on credit, you will always debit debtors control and credit sales. Sometimes instead of using the word debtors control, you will either just put the word debtors or trade receivables or receivables. Those are interchangeable terms that may be used there, but we'll use debtors control here as they did as well. And so you see we are debiting debtors control and we are crediting sales 8,496 rand. And you can see what the effect is on the accounting equation. Our asset is increasing, okay, because debtors control is how much we are owed by our customers, and it's going up because we just sold on credit. And our owner's equity is also increasing. Why is owner's equity increasing? Well, any income account increases our owner's equity. And so what falls under owner's equity? Well, we've got income, which increases our owner's equity. We've got expenses, which decreases our owner's equity. We've got drawings, which decreases our owner's equity. And we have capital, which increases our owner's equity. We check out the lesson that I just alluded to, Accounting for Beginners Part 1. You would know this. But they've also given us a second account here that we have to find the debit for, right? You can see they've credited trading stock, but we have to find what the debit is. But why are there two journal entries involved for one transaction? Well, here's a simple reason. It's because the company is using what is called the perpetual inventory system. Now, if you're in grade 9 and you haven't done it yet, then don't worry much about it. But if you've touched on it, or you've done it and you still don't know what it is, perpetual inventory system is when we are updating our inventory on a continuous basis, meaning whenever we sell inventory, we have to do two journal entries. One is for the sale, which we have just done, debit debtors control and credit sales, and the second one is for the trading stock, where you're removing it from your books, and this is specifically the trading stock that you sold. Okay, so I might be using the word inventory. Remember, inventory and trading stock, interchangeable terms. And so let's go back here. The question is, this trading stock that we sold, which is t-shirts, caps, and flags, how much did we buy them for? That is what we want to know. And that is the cost at which we are going to remove our trading stock from our books. Okay, we know we sold it for 8,496 rand. But the question is, how much did we buy it for? Well, we know we definitely bought it for less than 8,496 rand. Otherwise, we would not be making a profit, right? You buy it at the lower amount and you sell it at the higher amount. So we have to figure out how much that one is. And how are we going to figure that out? Well, we need to know how much the markup or the margin is. And we're told up here, the invoice below refers to a credit sale transaction where the business sold goods at a markup of 60%, meaning we sold it for 60% over and above our cost price. And so if you're looking at the markup here, here's how you're going to get what your cost price is, because we want to know how much do we buy all these items for that we sold for 8,496. Well, here's the formula that I'm going to give you. You take how much your selling price is, selling price, and then you multiply that by 100, and this is because it's a markup and not a margin, okay? And then what do we divide that by? And when I say 100, I'm actually talking about 100%, all right? We divide that by the 100 plus the markup percentage. How much is the markup percentage? Well, we're told it was 60%. If you go back up here, you can see the markup is 60%. So we take 100 plus 60 gives us 160, and that will give us what our answer is. Okay, so what is our selling price? Well, we sold it for 8,496, and then multiply that by 100, and then we divide that by 160, and that will give us what our cost price is, how much we bought these items for. Okay, 5,310 rand. I hope that was easy enough for you to follow. If you'd like a lesson specifically on calculating your markups and your margins, you'll find it in the link in the description below. But basically, if you're given the selling price, you take the selling price multiplied by 100, and you divide that by 100 plus the markup percentage, which is the 100 plus 60, and that gives you 160, and you get what your cost price is. You can work your way upwards as well by getting your selling price. Okay, so if you are given the cost price and you're not given the selling price, well, how would you calculate your selling price? Well, you just take your cost price, and then you multiply that by your 100 plus the 60, and then you divide that by 100. Okay, if you'd like to understand more on this, like I mentioned, you'll find the link in the description below that will help you understand this, and it will explain in great detail how we apply this formula. But nonetheless, this is our cost price. Okay, cost price for the items that we sold. And now that we have the cost price for the item that we sold, I'm going to put it here, 5,310 rand. Now, what are we going to debit? Whenever you sell an item, remember you debit debtors control and credit sales. Remember, we're debiting debtors control because we sold on credit. We've already explained that. But the second journal entry that you're going to pass is where you debit cost of sales. You debit cost of sales and you credit trading inventory or trading stock. Okay, so I'm going to put here cost of sales. Cost of sales. Now, whenever you're using the perpetual inventory system, those are the two journal entries you always have to pass, where you debit either debtors control or bank and credit sales, and the second entry is where you debit cost of sales and credit trading stock. Now, what is the effect on the accounting equation? Well, we know that trading stock is an asset, but it's decreasing because when we are selling it, we are giving it away to the customer. So it's decreasing in our premises, if you will. So I'm going to put negative under assets. And then what is cost of sales? Well, cost of sales is an expense account. And if you were paying attention to what I mentioned earlier, an expense decreases our owner's equity. Okay, so we're going to go under owner's equity and put it as a negative as well. And you can see the accounting equations is still balances. I've got a negative under assets and a negative under owner's equity. Remember, this transaction has nothing to do with liabilities. Liabilities is money that you owe other people. We're not owing anyone here. It's actually our customers owing us, so it's not a liability, it's an asset. I hope it has made sense. I hope you know how to do the journal entry whenever you make a credit sale or whenever you make any sale under the perpetual inventory system. Now, you have to be careful. If you've done the perpetual inventory system or the periodic inventory system and they tell you it's the periodic inventory system that is being used, then you would not be doing the second journal entry. The second journal entry would not exist under the periodic inventory system. But since it's under the perpetual inventory system, although we're not told, but we're given the format here, we're given the table and the written trading stock, so we already know that it's the perpetual inventory system. But don't worry too much about it. If you have not done it, then you'll get to it when you eventually do it. But I hope you understand how to handle a question like this one. So let's keep going. Question 3, journals and debtors ledger. And here we are asked to do a number of journals. You can see here 3.1.1, cash receipts journal, cash payments journal, debtors journal, and debtors ledger. And we are told here in 3.1, use the information provided below to record the transactions of Dal bookstores in the following journals and ledger for the month ending May 2024. And so we need to use the information that's provided to prepare all these journals. Now, I've already replicated what's in the answer book. And so you can see here 3.1.1, the cash receipts journal, cash payments journal, debtors journal, and debtors ledger, exactly as it appears in the answer book, as we have done with the other questions as well. And so let's go here and see what the information is that we are given. We've got May 2024, so we are focusing on this month, and these are the days: the 3rd, the 11th, the 15th, the 20th, and the 27th. Now we'll be completing them as we go through each transaction, and so let's start with the 3rd. Processed EFT 132 for 6,100 Rand as payment to Goosebump Traders. 5,400 was for trading stock, and the balance was for printing paper. Now maybe let's begin here. Let's look at these journals and just give a sentence explanation of what goes into this journal, or what is this journal about. Well, let's look at 3.1.1, the cash receipts journal. What do we record there? If you understand this and if you know this at the back of your mind, it makes your work quite easy whenever you're dealing with journals. And so cash receipts journal, what is that about? Well, cash receipts journal is a journal where we record all cash receipts. And what makes it easy is that it's in the name, all right? Cash receipts. And so all the money that has come into the business account will be recorded in the cash receipts journal. It doesn't matter where it was from, as long as it has been paid into our account, which will be recorded in the cash receipts journal. And so already that helps us narrow down when we're looking at transactions, which one would specifically go into the cash receipts journal. What about the cash payments journal? Again, it's in the name, quite easy. All cash payments will be recorded in the cash payments journal. And so it doesn't matter who you were paying and where the money was going, as long as you've paid money out of the business account, it will go into the cash payments journal. What about the debtors journal? Again, it's in the name, debtors journal. Who are debtors? Debtors are the people who owe us money as the business, and these are people to whom we sold on credit. Okay, they didn't pay us cash. They took our goods or they got our services, and they would only pay us at a later point in time. So those are debtors. And so what do we record in the debtors journal? We record everything that we have sold to our debtors on credit. Okay, so everyone who didn't pay us cash and would only pay us later would record them in the debtors journal. What about the debtors ledger? Well, the debtors ledger is where we record each specific debtor. So there would be a debtors ledger for each of our debtors. Okay, having highlighted that, let's go through the transactions. On the 3rd, processed EFT 132 for 6,100 Rand as payment to Goosebump Traders. Okay, so you can see here we processed an EFT and it was a payment to Goosebump Traders. Now, where do you think this one goes to? I hope it's very easy for you to identify. It goes to cash payments journal because we made a payment. And so understanding what we just went through and explaining what goes into which journal makes your life quite easy. And so you can see here that the transaction on the 3rd is for cash payments journal and not for any of the other journals because it doesn't go there, okay? And then 5,400 was for trading stock and the balance was for printing paper. Remember me mentioning it doesn't matter who you are paying or what you are paying for. As long as you've paid out money, it goes into the cash payments journal, okay? So that's what we'll do. So let's go to our cash payments journal here. And the good thing with the answer book is that you don't have to go in order, okay? You can put the answer for 3.1.2 before even 3.1.1. So you don't have to make sure you do 3.1.1 first, okay? We can just go however we choose to do it, but here we're going to use the transactions to answer the questions. And so since the first transaction, which is on the 3rd, goes here in the cash payments journal, we're going to record it there first. And so what is our document number? What is our date, details, and bank, and so forth? Well, let's go back and see what our document number is. We are told here EFT 132. So that's what we're going to put as our document number. So EFT 132, and put it down here. And then what is our day? Well, we'll go back here and you can see it's the 3rd of May. Okay, so you can just put here the 3rd or 3. We don't have to put 3rd of May because it's in the title, Cash Payments Journal of Dal Bookstores for May 2024. So when I put day 3, everyone will know it's for May because that's the title of our journal. And then what is the detail? A better question would be, who are we paying this money to? Okay, that would be the detail, or what were you paying the money for? Okay, so let's go back here. We are given the name and you can see we are told as payment to Goosebump Traders, and so you will put the name of the person whom you are paying the money here under details. And then how much do we put under bank? Well, we'll put the total amount that we paid out, and that would be this 6,100 Rand. So we're going to put the 6,100 Rand under bank here. And then trading stock and stationery, were we paying for trading stock? If that's the case, we put it there. Were we paying for stationery? If that's the case, we'd put it there. Were we paying for wages? If that's the case, we'd put it under wages. But if we are paying for something that we don't have a column for, that that will go into the sundry account. I hope that makes sense. If you'd like to understand more, by the way, on any of these journals, okay, whether it's the cash receipts journal, cash payments journal, debtors journal, or the debtors ledger, we have lessons specifically on these specific journals, so we're going to great details, okay, and we zero in on the journal. So you'll find the links to those lessons in the description below. Alternatively, you can go to our channel and just search for any of these journals and you'll see comprehensive lessons on them. Okay, so let's go back here and see what we're paying for. 5,400 was for trading stock. So firstly, let's do that. Let's put the 5,400 under trading stock, and you can see how easy it is for us to do this. 5,400 under trading stock. And then what was the remainder for? Because we paid 6,100 in total, and you can see here we're told that the balance was for printing paper. And so if we go back here, do we have a column for printing paper? Well, it's not called printing paper, but I hope you know printing paper falls under stationery, and that's where we're going to put the balance. And how much is the balance? Well, we're just going to take the 6,100 minus the 5,400, and we'll know what the balance is, the 700 rand. Okay, and you're done with that transaction. That's all you needed to do there. Like I said, if we didn't have a column for trading stock or stationery, for instance, then we'd put it under sundry account, and that's what we do whenever we don't have a column on any of the journals. So let's go back and continue here. We're done with the one on the 3rd. On the 11th, cash sales of merchandise according to the cash register roll, 7,000 rand, cost price 4,375 rand. Now what's happening here? Cash sales. What is happening? We are receiving money. To which journal do we record it? Well, I hope you are listening carefully. Which of these journals would it be? Cash receipts journal, because we're receiving money from the sale. Okay, so whenever you're receiving money, like I said, it doesn't matter where it was from, you will record in the cash receipts journal. So let's go back, look for a document number, and here we're not given a document number. So whenever you're not given a document number, you can call it something that relates to what's happening here, or you can come up with your own numbering sequence. But what they did is that they titled it CRR. And what does that stand for? Cash register roll. Okay, so it was the cash register roll that this amount was recorded. So we're going to follow that same sequence, CRR. Okay, and then which day was it? Well, let's go back. It's the 11th, as you can see here. And who are we receiving the money from? As you can see, we're not given the name of the person who paid us or the name of the entity which paid us. It was just cash sales in general. Okay, so we may have sold to 10 customers or 100 customers, and this is what was registered in the cash register roll. Okay, so what do you usually call it whenever it's a cash sale? Well, you're just going to write the cash sales, okay, or cash, whichever one it is. So I'm going to put the 11th and I'm going to call it cash sales. Okay, or you can just put sales there, it's also fine. And how much was it? Well, if we go back here, you can see it's 7,000 rand, but the cost price, what we call that, that's our cost of sales, 4,375 rand. So let's go ahead and record the 7,000 rand, because this is actually how much we received. Okay, don't confuse the 7,000 rand from the 4,375 rand. Okay, when it says cost price, that's how much it costed us to buy whatever we just sold for 7,000 rand. Okay, that's what it means. Okay, so let's go here and put the amount under bank as well, 7,000 rand. And what was it for? It was for sales, so we're going to put the 7,000 rand under sales. And what is our cost of sale here? Well, we're given the amount 4,375 rand, so we're going to write here 4,375. I hope that clears it for you, and that makes your work quite easy in knowing what you record where. All right, as long as we have columns for sales and cost of sales, we don't have to put anything under sundry account. So let's continue. By the way, why wouldn't we put it under debtors control? Well, that's because it was not our debtor paying us what they previously bought from us. Okay, if it's a cash sale, there's nothing to do with your debtors. Okay, in fact, the person only becomes your debtor if it's not a cash sale, if they're buying it on credit. Okay, so let's go ahead and move on. The 15th, invoice number 39 was issued to E. Blayton for goods sold on credit to him, 2,600 rand. What's happening here? We sold goods to E. Blayton. What do we call him? We call him our debtor. That's very important. And so if we sold goods to this person on credit for 2,600 rand, well, firstly, that doesn't go into the cash receipts journal because we're not receiving money. We sold it on credit. It was not on cash. And then the cash payments journal, it doesn't go there. We're not paying any money out. But the debtors journal here is where we will record it. Whenever you sell to any of your debtors on credit, you will record it in the debtors journal. Okay, so let's go back, and you can see here invoice number 39. So we'll put 39 and the day is the 15th. Okay, so let's do just that. The document number is 39 and the day is the 15th. Okay, And what is the details here? What are we going to put up as the details? Well, the question is, who did we sell to on credit? Well, if we go back here, you can see the name is E. Blayton. So we're going to put that down as the details. And then we're just going to leave the folio here as blank. And we're going to go straight to our sales. How much did we sell these goods to him for? Okay, let's go back. And you can see here the goods were sold on credit to him, 2,600 Rand. So that's how much we're going to put under sales, 2,600 Rand. And then the cost of sales, how much did it cost us for what we sold him? Well, let's go back here and read the detail. Let's go up here and look for any detail that we are told about the markup or the margin. You can see we are told R. Dahl is the owner of Dahl bookstores. He buys and sells published books. Their business normally uses a markup of 75% on cash sale transactions. Okay, so whenever it's a cash sale, a markup of 75% is added to the cost price. But if it's a credit sale, 100% is charged. That's clear enough. So in this case, is the credit sale? Of course it is. That's why we're putting in the debtors journal. And we're told specifically here that goods sold on credit to him. And so we're charging 100%. And so if we are told here that we sold goods to him and the invoice amount was 2,600, that means the 100% is already charged. And so how much is the 100%? Well, let's go here and do the calculation. We're going to take the 2,600 Rand multiplied by, I want the 100%, okay? And then we divide that by, well, this 2,600 is the 100%, 100 divided by plus the 100% of the markup. That makes it 200%. So it's 2,600 times, and that gives us 1,300 Rand as our cost of sales. Again, if you'd like to understand more on this one here, you can check out our lessons on simplifying interest rates and how to calculate markups and margins. You'll find it in the link in the description below. But basically, it's the amount multiplied by how much we want. We want the 100%, how much it costed us, divided by how much we have. We have the 200% because our 100%, how much it costed us, plus our markup of 100%, which makes it 200%. All right, I hope that's clear enough. And so what else do we have to do here? Well, the other thing that we always have to do is whenever we sell to our debtors, we have to record it firstly in the debtors journal and then in the debtors ledger as well. What is the difference between the two? Well, the debtors journal is really a book of first entry, a subsidiary journal where we record all our credit sales of goods or services. And then our debtors ledger is a book of final entry where we have individual accounts, and specifically we have E. Blayton here. And so we would have recorded it in the debtors ledger. But why are we not recording it in the debtors ledger? Well, because if you look at 3.1.4, where they ask us to actually do the debtors ledger, we're told to show only how the transaction dated the 27th will be recorded in the debtors ledger account of E. Blayton. And so they are telling us to only show the transaction that happened on the 27th. And if we go down here, you can see the 27th is when he paid us 30%. And we'll look at that later. But the one on the 11th, we're not asked to show it. In fact, if you look at the answer book, they've already put for us the date of the 27th, and so that's the only one they want. Okay, but ideally, if you have to do the debtors ledger, just remember that you're also going to be recording the credit sale that you have made to this specific debtor, and then when he pays you, you're also going to record it in the debtors ledger. But in this case, we're not, because we're only asked to record the transaction on the 27th when he's paying us. So you just have to bear that in mind. Okay, that was easy enough for us to do. So let's go back here, and on the 20th, a stop order for 3,200 Rand reflected on the bank statement as the monthly salary payment for the bookkeeper J. Rowling. Now, what is happening here? Well, a stop order is an instruction given to the bank to make a payment to a third party. Okay, so in this case here, we are making a payment to the bookkeeper J. Rowling. Now, I want you to guess which journal this one goes to, because it should be very easy based on how we defined each of the journals or how we said what transactions go into which journals. Well, I hope you guessed cash payments journal, because that's where it goes. We made a payment out. Okay, so that's very important, understanding what goes into each journal, which makes your life quite easy. And so what's our document number? Well, let's go back here. You can see we're not given a document number, but usually when they tell you that you're getting something from the bank statement, that's your document number, because you're easily stating where you got this information from. So I'm going to write the BS as we usually do, okay, for bank statement. And what is the day here? If we go back, you can see it's the 20th, and the amount is 3,200. So we put the 20th there, and the details, who are we paying this money to? Well, let's go back here, and you can see it's the bookkeeper J. Rowling. So we're going to take that name and put it under details, and the amount is 3,200 Rand. And where else do we put this amount? Well, it's definitely not under trading rolling stock. It's definitely not under stationery. And is it under wages here? Were we paying wages? No, we're not. Okay, wages are your casual workers that you usually pay on a regular basis. That would be weekly or even monthly. Okay, but this is a salary. Okay, if you can go back here, you can see that it's a monthly salary to the bookkeeper J Rolling. So we're going to put it under sundry account because we don't have a column specifically for salary. If what we have here under wages was written salaries and wages, then we'd definitely put the amount there, but it's not. It's just written wages. So we need to put the amount under sundry account, 3,200, and the details there is salary. Very important. The detail actually that you put here under sundry account is the account to which you would record this amount, and this account would appear in your trial balance and your financial statements as well. All right, let's go back and see what else do we have to do. The 27th, E. Blayton paid 30% of the amount from the transaction dated the 15th. Receipt number 24 was issued. What do we usually record in our debtors ledger? Well, it records our transactions with each specific debtor, and in this case, E. Blayton. And so what we would record here under the debtors ledger for E. Blayton is how much we've sold to him on credit, how much he actually owes us, and how much he has actually paid us. So again, as I mentioned earlier, this transaction on the 27th is this debtor, E. Blayton, paying us 30% of the amount. So that will definitely be recorded in the debtors ledger. Now, that's the first thing. But what else do you conclude from this transaction? What is happening here? We're receiving money. And so which other journal do we record this amount? Well, I hope you guessed it. Cash receipts journal. We're receiving money, cash receipts. Okay, so let's first record in the cash receipts before we record it in the debtors ledger. All right, so the document number or the receipt number is 24, so that's easy, and the day is the 27th, and the person who's paying us this money is E. Blayton. Okay, so let's do just that. The document number is 24. The day is the 27th, and the person paying us is E. Blayton. And how much are we being paid? Well, we're told it's 30% of how much he actually owes us. Okay, if we go back here, you can see paid 30% of the amount from the transaction dated the 15th. And so the transaction on the 15th, it was 2,600 Rand. And so we just have to calculate 30% of that. Okay, so let's do just that, 2,600 Rand multiplied by 30%, and that will give us how much is actually paid us, 780 Rand. So we'll put that under analysis of receipts and under bank. And what is this money for? Well, it's from our debtor, so that's debtor's control, and that's how much we'll put there. And so you see here under cash receipts journal, whenever you have a column for debtor's control, it's always going to be whenever you've received money from your debtors. Whenever they pay you, you put it under debtor's control. And now let's go to the debtors journal. Again, everything is going to be exactly the same. We're given the date here, 2024 May the 27th. That was in the answer book already. And the detail here is not the name of the person who paid us, in this case E. Blayton, because that's the name of the ledger. Okay, debtors ledger for E. Blayton. And so you don't repeat the name of the person who paid you, because that's the name of the ledger. It's his name. So what are we going to put here? We're going to put the document number, okay, or the receipt number. So you're going to put here receipt number 24. And then what is the folio? Where did we record this? Which journal did this come from? Well, CRJ. We're saying that this money was received from this person, and that's why it came from the CRJ, and it's a credit amount. So whenever our debtor pays us, okay, in the debtor's ledger, we're going to put it on the credit side. Whenever we sold to them on credit, as we should have done on the 15th, as I mentioned earlier, we would have recorded it on the debit side, the amount that is owed to us by our debtor, the 2,600 that is. And the balance here is how much is remaining. How much does he owe us? Well, in this case, if we had recorded how much we actually sold to him on credit, that's 2,600, we would have deducted the 780 Rand and would see how much he still owes us. And that's the 70% of the 2,600. But since they blanked that out in their answer book, we'll just leave that one here. So let's go back here, and we've just done the one on the 27th, and that would be it for our journals and ledgers, specifically 3.1.1 to 3.1.4. Now let's look at 3.2 quickly. We are told here under 3.2 the business did not achieve its intended markup of 75% for the transaction dated the 11th. Okay, so what happened on the 11th? Well, we're told it's a cash sale, as we looked at earlier. Cash sale of merchandise according to the cash register roll, 7,000 Rand, cost price 4,375 Rand. Okay, and whenever we make a cash sale, what did we learn earlier? Well, if we go back up here, we can see that 75% on cash sale transactions. And so the question is, if it costed us 4,375 Rand and we sold it for 7,000 Rand, did we actually make that 75% markup? Well, we can easily do a calculation and determine that, because 3.2 tells us that the business did not achieve its intended markup of 75% for the transaction dated the 11th. And we have to show the calculation to justify this. And so we'd expect the markup that we will calculate to be less than 75% to justify what they've just told us there. And so the first thing we have to do is to calculate how much profit we made. And of course, we get that by taking the 7,000 Rand that we sold it for minus how much it costed us, 4,375 Rand. And then we take that profit and we divide it by 4,375 Rand. And we will get how much markup we made. Easy enough, right? Okay, so again, I mean, it's easy, just like you selling whatever product. How do you see your profit? Well, how much I sold it for versus how much it costed me, and that will be your profit. And then you divide it by how much it costed you and you'll get your markup. So let's do just that. Let's go here and you will take the 7,000 Rand. So I'm going to put it in brackets, 7,000 Rand minus the 4,375, 4,375, and we'll get our profit. So let me just put it separately. Profit made. Okay, profit made is the 2,625 Rand. And how much did it cost us? The cost is the 4,375, 4,375. Okay, that is how much it costed us. And so for us to see how much the markup is that we made, okay, markup will take the 2,625, meaning the profit made, divided by the cost, and that will give us our markup. And you can see here it's 60%. And so it does confirm what they have told us, that they didn't achieve the intended markup of 75%. Remember, I actually said it has to be less than 75%. If they've already told us that and they're correct, then our calculation will show that it's actually less than 75%. And in this case, they did make a markup of 60%. So they didn't achieve their intended markup of 75%. And our calculation has just shown that. I hope that has made sense. I hope you understand more on journals and debtors ledger. So let's keep going to the next question. So here we have question 4, which is section C, general ledger and trial balance. And we are told that the following records were extracted from the books of NEF wholesalers on the 31st of March 2024. What are we required to do? We're told to use the information below to complete the following general ledger accounts for the month ending 31 March 2024. We have to do the bank general ledger account and the cost of sales general ledger account. Now, if you'd like to understand more about the general ledger, in fact, if you have never done the general ledger before, if you've never looked at it, it's otherwise known as the T accounts, you might want to check out our series on accounting for beginners, specifically part 3. We'll link it in the description below. And if you check that one out after that lesson, you should have a very good idea of how to do the general ledger. Okay, but as we go through this one here, you should have an understanding of how to do it. But if you really struggle, please go check out that lesson as well, or rather even start there before continuing with this lesson. But either way, it should work for you. And so we are given information here, and as usual, we're given the answer book where we have to just fill in the information that's missing. Here we are given 4.1, and we have to do the bank T account, and 4.2 the cost of sales T account. Now, what you know, or what you should know already, is that the bank account is an asset account, and our assets increase on the debit side. So whatever money comes into the bank account, we put it on the debit side. Whatever money goes out of the bank account, we put it on the credit side. Okay? And cost of sales is an expense account. It increases on the debit side as well and decreases on the credit side. But let's go through the information here. You can see we're already given the opening balance as at the 1st of March 2024, and it was 23,100 Rand. And the fact that it's on the debit side means it was a positive bank balance. And then we put the total payments on the credit side. In fact, I need to change that to CR, right? Credit, and here credit as well. Right, to put the total payments on the credit side. Why is that? Because it's reducing our bank account. Remember, our assets increase on the debit side, and when the bank account decreases, as with any other asset, we put it on the credit side. And so when we have total payments here, which comes from the CPJ or the cash payments journal, we put it on the credit side because it's cash payments, money leaving our bank account. That's why it's on the credit side. Okay, so let's go back here and fill in the information that we need to. In this case, we're given the cash receipts journal, and we are told that the sales was 79,857 Rand. The cost of sales was 27,760 Rand. The debtors control was 11,780 Rand, and the sentry account 60,000 Rand. Okay, and we're given the cash payments here. Now, what do we have to do? Well, if you go up here, you can see that the solution requires us to put the total receipts and the total payments. Okay, total receipts on the debit side, total payments on the credit side. Now, total receipts, we get it in the CRJ as you've been given here in the folio. And so we just have to look at the CRJ amounts and ask ourselves, what was the total receipt that came into the account? Well, I'm sure you already know how to do the cash receipts journal, but how do we do the cash receipts journal? Well, remember, we record all the money that has come into the bank account or all the money that we received, and we have a column for sales here, and it's 79,857 rand. And then we also have a cost of sales here. What is the cost of sales? Cost of sales is how much it costed us to make the sale that we made. Okay, so this is not necessarily how much money we received, but how much it costed us to sell the products that we actually sold. And then the debtors control over here, 11,780 rand. Well, I'm sure you should know that by now, that these are the customers to whom we sold on credit, and they have paid us in the month of March. Okay, the reason they appear in the cash receipts journal indicates to us that they actually paid us. And then lastly, we have the sundry account. These are all the accounts for which we do not have a column for, as we have explained previously in the other question. And so we have the amount for sales, we have the amount for cost of sales, for debtors control, and for sundry account. And so which ones will qualify, or which ones will go into our bank general ledger account? Well, we definitely are going to put the sales amount, because when we put sales here, we're talking about those to whom we sold on cash. Okay, 79,857 rand. And cost of sales, as we have already explained, this is not necessarily money that we have paid to anyone in this particular specific period. It's just indicating that it costed us 27,760 rand to buy the products or the inventory that we've sold. So that one is not part of money that we have received. And then debtors control is definitely part of money that we've received. We've received 11,780 rand from those to whom we sold on credit. We could have sold to them in March or even in previous periods, February or even earlier. Okay, and then the sundry account, 60,000 rand is what was received. We don't know what it was for, because they didn't give us the actual accounts here, so that's fine. So we're going to add together the 79,857 rand, the 11,780 rand, and the 60,000 rand, and that will go under the total receipts. So let's do just that. 79,857, so I'm going to add them together here, plus 11,780 for debtors control, 11,780, and plus lastly the sundry account, 60,000 rand, 60,000, and that gives us 151,637 rand. That is the total receipts, how much we received in the month of March. What about the total payments? Well, it's going to be a very similar exercise. So let's look at it here. We've got the bank amount of 127,882 rand, and then we've got trading stock, meaning the amount of stock that we actually bought. We've got stationery, wages, and sundry account. But here's the thing. If we're already given the bank amount here, it already covers everything. Okay, with this bank amount of 127,882 rand is actually how much we paid during the month of March. If you know your cash payments journal and the cash receipts journal, if you have the total for your bank column, then you have everything that you paid out. Remember, here under cash receipts, we didn't have the total for our bank. We're given a question mark here, and we are told here these are the column totals in the subsidiary journals. And so these are the totals for all of them. And so for cash payments journal, we don't even have to do the calculation. We're just going to take the 127,882 rand. And by the way, if you add all these other columns together, you will see that it will actually give you that amount. Okay, they all make up what we have under bank here. So 127,882 is what we're going to put here as the total payments for the month of March. Okay, now that we have done that, all we need to do is to put our totals, okay, because that's the only information that we're given, with the exception of the debtors journal. But remember, the debtors journal records how much we sold to others on credit. So they didn't pay us cash, we didn't receive money, so it has no effect on our bank account in this case. Okay, so let's close off our T account or our general ledger account. How do we close it off? Well, if you checked out the lesson that I alluded to, Accounting for Beginners Part 3, you should know this. But basically what we do is that we compare the debit side and the credit side. Whichever side is bigger, in fact, let me just do that. We've got on the credit side 127,000 rand. On the debit side, you've got 23,100 rand and 151,637 rand. And so you can clearly see that the debit side is bigger than the credit side. And so what do? We take the total for the bigger side, which is the debit side in our case, and then add them together and put it down here. And then we also put that same total on the credit side. Okay, so we have 174,737 rand on the debit and credit side as the totals that we have put. Remember, we put the total of the bigger side on both sides. And then we ask ourselves the question, What is missing on the smaller side? The smaller side is the credit side. What is missing on the credit side to make it equal the debit side? Well, we're going to call that the balance carried down. Okay, balance carried down. And what is missing on the credit side to make it equal the debit side? Well, we're going to take the total, all right, for the debit side that we have put on the credit side already, minus what we have on the credit side. And that will give us what is missing on the credit side to make it equal the debit side. Now that we have that, we can add together the credit side and you can see that it's 174,737 Rand. Those are the steps that you take in closing of a T account. But we're not done as yet. Since the debit side is bigger, we're going to put here balance brought down. Okay, balance brought down, and this is for the first of the following month. You can see it's the 1st of April 2024. Okay, and then we put the amount that the debit side is bigger by, and it's bigger by 46,855 Rand. Remember, I'm in essence comparing the total of my debits minus the total of my credits, and that will show me how much this debit side is bigger by, which we already did by doing our balance carried down, and we got the 46,855 Rand. So whatever amount you have under balance carried down, you're going to shift it to the bigger side under the total and put it as balance brought down, and put the date of the following month, the 1st of the following month, and you put the amount there. Okay, I hope that has made sense, and I hope it has given you an idea of how to do T accounts if you didn't know before. But if you want to understand it in great detail, where we just look at T accounts, you might want to check out that lesson that I alluded to. Okay, so now let's look at cost of sales. How are we going to do the cost of sales T account? Well, this should be fairly easy because we know our cost of sales is an expense account, and expenses increase on the debit side. Now here's something interesting. When you look at the solution to this paper, you will find that they actually did it incorrectly. They recorded the amounts on the credit side. Remember, cost of sales is an expense account. And so whenever our expenses increase, we record it on the debit side. All our expenses, whenever they increase, we put them on the debit side. But you'll find that they put all of them on the credit side, which I believe is definitely a mistake based on the accounting rules. So if you are looking at this paper, you're looking at the solution, or you're looking at the answer book, you might want to go query and you'll find that the answer is exactly the same as I have mentioned. If you checked out our lesson for accounting for beginners part 1 and part 2 specifically, you will notice what we do with expenses such as cost of sales. Okay, we put them on the debit side, even in the T account, as we do with assets, and bank is one of our assets, and that's why whenever it's increasing, it's on the debit side. Whenever it's decreasing, we put it on the credit side. So let's look at the question and see what is applicable to cost of sales. Under 4.2, they've asked us to do the cost of sales. And so what qualifies as a cost of sale? Well, the first thing you'll notice there, under CRJ, we've got an amount for cost of sales, 27,760 Rand, and we've already explained that this is not money that we are receiving, but this is basically how much it costed us to make the sale that we actually made. Okay, so we're going to record this as cost of sales, 27,760 Rand. But firstly, let's put our date, which is the 31st of March 2024. So let's go back up here. I'm just going to copy that and put it as the 31st of March 2024. And then what is the detail going to be? What is my detail here? What is the contra account for cost of sales? Well, let me just say this. Whenever you're recording your cost of sales, whenever you make a sale and you have to record cost of sales, your credit is going to be trading stock. Okay, you debit cost of sales, you credit trading stock. And so because we've done that, we're going to write under details trading stock. Remember, it doesn't matter how you sold your stock. Okay, whether you sold it on cash or on credit, you're always going to debit cost of sales and credit trading stock. So just know that as a rule. And then the folio, how did we make this sale, or where did we get this amount from? We got it from CRJ. This just indicates that we actually sold this trading stock on cash, okay, by looking at the folio here. And if we cross-reference here with the subsidiary journal, you will notice that the amount appears there. Remember this amount here for cost of sales, 27,760 Rand. Remember, the column is not titled trading stock. It's titled cost of sales, meaning how much it costed us. And we know it's the trading stock that we bought that we are now selling. That's why we're putting the cost of sales there. Okay, and what is the amount? Let's go back here, 27,760. So I'm going to put here 27,760, and then we do the second journal entry for the cost of sales. And where does it come from? Well, if you look at the debtors journal, you will notice that it's here cost of sales. And just a note, why wouldn't you see cost of sales in the cash payments journal? Well, that's because you are paying money to someone, so it's not your customers buying from you and paying you money. Okay, so whenever you are paying someone money for buying trading stock, for instance, there is no cost of sales there. The only time cost of sales exist is whenever we've made a sale, and you want to take note of that. Okay, you want to write that down somewhere if you're confused with these terms. Cost of sales only exists whenever we make a sale. whether that sale is on credit or on cash. And I don't want to confuse you by introducing things like the perpetual inventory system and the periodic inventory system and saying that the perpetual inventory system is the only system that actually accounts for cost of sales during the period. But if you haven't done that already, don't worry about that. But just know that it's only when we make a sale that we have cost of sales. And of course, when we make a sale, we record it under cash receipts journal if it was on cash, and the rest will go under the debtors journal if it was on credit. And that's exactly what we have here. We made sales worth 45,780 rand, and it costed us 13,941 rand to buy the stock that we actually sold. So we're going to write here trading stock. Remember, the date is the same, the end of the month. And why are we writing trading stock? Well, because we are debiting cost of sales, we are crediting trading stock. And as I mentioned, it doesn't matter whether it was on cash, meaning CRJ, where we received money, or on credit, debtors journal, as we have here. And the folio is debtors journal, okay? And the amount is going to be 13,941 rand. So 13,941. And that's all we needed to do. I hope that has made sense. The only issue we had here is, of course, that they recorded them on the credit side as opposed to the debit side. And I can tell you now that was an error. Okay? Now that we have completed that, let's move on to the final question, question 5. Almost there. So let's go down here. And this is specifically on the trial balance. By the way, we've done a lesson as well on the trial balance. You might want to check that out in the link in the description below as well if you'd like to understand more details on the trial balance. So all those lessons that relate to any of these that we have done, you'll find it in the link in the description below. Otherwise, you can search our channel and you should be able to find many of these lessons. And so look at the required. Use the additional information provided below to assist you to complete the trial balance of Savoy Traders for the month ended February 2024. Okay, and we're obviously given the introductory notes here. The following trial balance has been extracted from the book of Savoy Traders. The bookkeeper has fallen ill, and the owner, Joy Savoy, is struggling to complete the trial balance for the month of February 2024. Okay, so we have here the trial balance, and of course, you know the trial balance has got two sections: the balance sheet account section and the nominal account section. And it's got a debit and a credit, and the total of your debits must equal the total of your credits if you know your debits and your credits. And we've got the additional information here. So this should be fairly straightforward for us if you know your trial balance, or specifically if you know your debits and your credits. And so let's look at the answer book here and go to question 5 and see what we have. Here's what's on the answer book. We just have to fill in the missing details or the missing information. And so let's go through them. There are many ways you can actually complete this, okay? You don't have to follow any specific order, but however you choose to do it, your answer must still arrive at the correct answer or at the final solution that they should have. So let's go through the additional information as we complete it. The owner's capital contribution at the beginning of February was 120,000 rand. She had increased her capital contribution to 240,000 rand. Okay, so the owner's capital contribution at the beginning of February was 120,000 rand, and she had increased her capital to 140,000 rand. Well, what's the answer? Well, we're going to put what it actually is. She had increased it 240,000 rand, not by. And that's why mistakes are usually made in many questions, not just accounting, where you confuse the word to and the word by. And so since we are told she increased it 240,000 rand, that means the capital balance is currently sitting at 140,000 rand. She basically increased it by 20,000 rand. Okay, so let's put the 140,000 rand here. Remember, capital is an equity account and it's always put on the credit side. Okay, 140,000 rand. If you watch our accounting for beginners series, you should know this based on the acronym that we usually use: DEAD-CLICK, DEAD, debit, expenses, assets and drawings, and credit, liabilities, income, and capital. Okay, so capital is credited. All right, let's keep going. Additional information number 2. To date, the owner had taken 8,000 rand cash for personal use. Okay, so if the owner has taken cash for personal use, what do we call that? We call that drawings. So we're going to put the drawings, and as you can see, the answer book didn't have drawings for us, so we need to put here drawings. And drawings are always debited. If you remember the acronym I just mentioned, or you watch our lessons on accounting for beginners part 1 and 2, you should know this. And so how much was it for drawings? It was 8,000 rand. So 8,000. Okay, and then we move on to the next one. The business uses a markup of 33.33% on all sales transactions. Okay, if it uses the markup of 33 0.33%. What is the sales? Because you can see here we are given the cost of sales, 75,000 Rand, but we're not given the sales amount. And so for us to figure out the sales amount, we have to work it out using the markup percentage. Remember, the cost of sales shows us how much it costed us to buy what we've just sold. And so if we add 33.33%, it should give us our sales. And we've already looked at how to calculate markups and margins in our previous questions. So you should be able to know this already. If we are given the cost of sales, how do we get our sales? Meaning our cost of sales, if we're using a markup, is 100%. That means our sales is going to be the 100% plus this 33.33% that we have here. And why am I saying 33.33? Because 1 over 3 is actually 0.33. All right. So if you just take 1 divided by 3, you should see that the decimal is 0.33. So it's 33.33%. So let's calculate our sales. Okay. We've got 75,000 Rand as our cost of sales. So that means we're going to take the 75,000 Rand times 133.33 divided by 100. And why do we do this calculation? Well, as we have already done in the other question, we take what we are given, which is the cost of sales, multiplied by what we want. We want the 133.33, which is the sales, how much we sell it for, and then we divide that by what we have, which is the 75,000 Rand, which is our 100%, because this is using markup. Okay, so what is our answer going to be? If we press enter there, you can see it gives us 99,998. But when you do a calculation like that, you're like, it's a bit odd. That is actually correct. However, when you look at the solution, you see that actually they have put 99,975 Rand. And I wondered how they did that. And what you'll realize is that what they have done is that instead of putting 133.33, they've just put 133.3. So they removed the other 3. Okay, so they just put 133.3. And if I press enter, you can see it gives me 99,975 Rand. Okay, and that's the answer that they have there. However, I would have put the full decimal, the 0.33. Okay, because if you take 1 divided by 3, it gives you 0.33. But that's still fine. It doesn't throw us off by much. That's still fine. The solution is still fine with that. Okay, it's not a train smash. Okay, now that we have done that, let's move on to the last one. So if we go here, you can see that the last one says an amount of 2,200 Rand for stationery was excluded from the sundry expenses. And so what are they saying? They're saying that stationery should be part of sundry expenses. Remember, that's not always the case. That's just how they've decided to allocate stationery as in this particular case. And companies are allowed to allocate them to whichever line item they want to do. Of course, that's to make sense. But you usually see stationery as a separate line item. But since they've told us that it was excluded from the sundry expenses, it means that this 2,200 was supposed to be part of the sundry expenses. Okay, so we need to add the 2,200 Rand to the sundry expenses of 2,050 Rand. So let's do just that. If we take the 2,050 Rand, and you can see we already have sundry expenses here in our answer book, so we'll take the 2,050 plus the stationery amount of 2,200 because it was excluded, so we need to include it. And remember, it goes on the debit side because our expenses go on the debit side. And you can see by now how critical it is for you to understand your accounts and which side they go, whether debit or credit. And a great thing that you will do in understanding that is watching our Accounting for Beginners series, as I've been mentioning time and time again as we've been going through this paper. And so we have done everything they've asked us to do. We've taken into account all the bullet points that they gave us. So all we need to do is to total up the debit side and the credit side, and they have to be the same amount. Okay, so let's sum up the debit side. Okay, we will add up everything from the top, and that gives us 275,975 Rand. Now we'll do the same for the credit side. It has to give us the same amount. If it doesn't, we have either done something wrong somewhere, or the information they gave us is incorrect somewhere, one of those two. But it's usually the student who would have gotten something wrong. So let's have a look here. You can see it gives us 275,975 Rand for the credit side as well once we sum it up, and that means we have done everything correctly as we should have. Okay, so if we go back up here, you can see that's it. That's all we had for question 5, doing the trial balance. And I hope it has made sense. I hope you've gained value from this thorough lesson. And if you're in grade 9 doing EMS, you should be fairly confident when you're going into your paper. Just follow some of the advice we gave on some of those lessons that you need to check out to cement your knowledge of particular topics if you haven't already. Otherwise, if you followed us to the T and you attempted some of these questions before watching, you should be well on your way to getting a very good mark for this paper. If you have indeed gained value from this lesson, consider subscribing to our channel, like this video, and share it to those you think it might help. Till next time, cheers.